Hello and welcome to today's video. If you're new into the market, in this video, we'll discuss just 6 steps for you to start investing and be successful in the stock market or in the investing world. So before we get deep into understanding what to invest, where to invest, why to invest, first let's understand the purpose, the reason why you should be investing. So what is your reason for investing? Why do you want to invest? Why should people invest their money and not keep cash at hand? What is the reason behind it? So the main reason that I can think of is, which almost all of us would agree to it, would be to beat the inflation and to make some money for ourselves. Now by investing, I'm not saying investing can only be done in the stock market or into the mutual fund investing or stocks and bonds and whatever, this and that. No. Investing can be in any place, in any asset class that has the potential to beat the inflation and also has the potential to give you some returns, some profit from your investments. But if I focus into the stock market field, you would find a vast majority of the people in our country are still untapped into the stock market. So in India, I would say approximately around 4 or 5%. That's hardly, that's the max. About 4 to 5% of the people probably know about the stock market and they might have even thought of investing, or they have invested a little bit into the stock market. Out of 150 crore population, maybe just 3 or 4 crores are invested into the stock market as of now, or maybe a little bit more, maybe. It's a huge potential, still untapped. But what is the reason why people do not enter the stock market? Why is it that out of 150 crore population, only about 4 to 5 crore population, about 4 to 5 crore people are invested in the stock market? The primary reason is learning, understanding the stock market. So it takes time. It takes time for any of us to learn, to understand, to be into the stock market, to consistently monitor and figure out what's happening, to consistently keep yourself updated about what's going on around you, and then take a call or take an action in the market. It's a daunting task. And it's a daunting task, especially for someone who's getting started. He thinks it's a huge field and there is no end to learning. Now let's try and understand this. When you invest into the stock market, you actually buy into a portion of the company that you're investing in. So if you're investing in a particular stock, you're getting a part of the company. You're getting the ownership, a part of the ownership of the company. And if you're part of the, and if you're an owner of the company, or maybe a partial owner of the company, you are entitled to get all the profits, all the losses, all that's happening within the company. You get a part of that based on the amount or the percentage of shares that you hold for the company. But there are various ways to invest into the stock market. There are various ways you can leverage your investments into the stock market. But before you plunge into that, you should know a lot of other things before you do it. Step 1, figuring out your financial goal. So what's your goal? We all say that. Have a goal, have an aim, have a planned date to achieve something in your life. We do that same thing in the stock market. What's your financial goal? You do that in your personal life with your personal goals. But for the stock market, for the investing world, you have to have a financial goal. What is your financial goal? Now, the reason why we set up goals in our personal life is because we want to achieve something by a certain period of time. The same thing happens in the investing world as well. When you give a financial goal to yourself, saying that, okay, fine, by this age, this is what I'm going to achieve. I'll be a millionaire. I'll be something by this particular age, by this time. So what you're doing is you're eventually giving yourself a time frame. You're eventually giving yourself a period that, okay, fine, this is the time I have, and by this time I need to be there at this position. So what happens in this scenario is that every passing month or every passing year that goes by, you get to review your position. You get to know where you're standing right now and how far is your goal and what is the time that you have left with you. It gives you a scope to twist and tweak your investments in your favor so that you reach your goals by the desired time that you have set for yourself. So this is the prime importance of setting a goal for yourself, a financial goal for yourself. Now once you've set up your goal, step 2 comes in, which is getting acquainted with the investing world. Maybe in the stock market, real estate, whatever it is. Wherever you want to invest, get yourself acquainted to that investing world. That is step 2. Once you've done your thorough research with your investing world, with the research about knowing your investing world, knowing where your investing is, knowing where you're going to invest your money, knowing everything about it, the third step is budgeting for your investment. Now, the reason why budgeting is important is because the money that you're earning right now, if you're not investing it, probably, I assume, you're spending the most of it. So the reason why budgeting is important is because budgeting would allow you to pull in some money from your income towards the investments. Now, in budgeting, it's very much important to understand what is your post-tax income, because that is the real money that you have at hand. The money that you have at hand is the money which you should be considering for your budgeting. And from that money, you should set aside a particular amount for your investments and then keep the rest for your expenses. Our recommendation is, if you're starting off, start off with at least 25% into your investing. 25%, that's 1/4 of your income gone into investments. It's tough. For people who haven't invested for a longer period of time and you have a small family, it is tough. Taking 25% out is real difficult. I understand that. So if you're in a scenario where you haven't invested at all and you are thinking of investing right now, and here I am giving you a recommendation that you should invest at least 25%, it's going to be very difficult for you. Do not switch it off. Do not swipe off this video. Stick with me. I'll tell you how you can do that. Start off very small. If you haven't invested at all and you're thinking of investing right now, start off with 1%. I'm sure you can squeeze out 1% from your salary. You can definitely squeeze out 1 to 2% from your income. Then try 3%, 4%, 5%. Slowly and gradually start increasing your allocation towards your investments and start spending less towards the things you need. Stop buying more. Pay off your EMIs and do not buy again. That's how you allocate your money more towards your investments. That's how you budget yourself. As we discussed, we need to have a financial goal for ourselves. Once you have a financial goal for yourself, you would know that to reach that particular level of financial success, you would need to invest this much amount every month. So if you have to invest this much amount every month, you need to budget and figure out how to extract or how to bring out that amount every month out of your income to put it into investments in order for you to reach the financial goal that you have set for yourself. A big part plays an important role here is your debt, the amount of loan that you have taken in, the EMIs that you're paying off. See my debt management video. I'll give the link in the I button and also in the description. You can go through the debt management video. You will understand how you can channelize your debts, how you can close your loans quickly and channelize your investments, or channelize those money that was going as an EMI earlier. You can put those money into your investments. So now, if you can manage your debt properly, if you can manage your debts, your EMIs, and you can budget, you can take out that money and put it into your investments, you would probably reach your goal faster. The asset that you have as on date, your risk tolerance, and the time horizon you need to remain invested will be very clear for yourself. Stage 4, define a strategy for yourself, a strategy for investing. Now that you got acquainted with the market, you need to define a strategy for yourself, a strategy for investing in the market. Setting a strategy needs all the factors to be taken into consideration, like your knowledge, your risk appetite, your interest, your time horizon that you want to stay in the market invested, your financial goals that you have set for yourself, all of these into consideration, or to define a strategy for your investments. Now, based on what you decide, there are two ways in which you can approach investing. One is a passive investing, the other is active investing. I'll run through very quickly. Active investing is something which you do yourself, which you do a cherry picking of stocks, bonds, mutual fund, all by yourself actively, or maybe with the help of an active trader, investor, or your mentor, whoever it is. You get to select the stocks and the bonds or the investment instruments you want to invest in. That is active investing. In passive investing, nothing like this happens. It's mostly a strategy that implies buy and hold technique. You can do it yourself. You can do it with the help of your mentor, your broker, whoever it is. But it's more of giving time in the market than timing the market. It's more of spending more time in the market than timing the market. That is the basis of passive investing. Step 5. Now that you have defined your strategy for investing, it's time to find or choose your investment account. Once you have defined your investing strategy, choose the broker, choose the company that gives you the most benefits as per your strategy. Choose the broker that will give you more information based on the type of investing you have chosen for yourself. All brokers are not good for every style of investing. So if you're more comfortable with the long-term investing options, with long-term investments, you do your research on your own, you probably would have to choose a broker which doesn't give you much information about daily trading, technical analysis, charts and this and that, and it just gives you or just provides you with a portal to interact with the exchange and buy and sell shares for yourself. If you're confident enough to invest or investigate for yourself and find out the stocks that suits you for your investing opportunity, for your investing goal, then probably you would not go with a broker which will give you more technical analysis, charts and this and that, news, daily news and all those things, because they are irrelevant for your investing strategy. On the other hand, if you're more of a day trader or a scalper, you would require all of these information more than anything else. So probably you'll have to choose a broker which gives you a deeper insights or more detailed analysis, charts, graphics, refreshed every second to keep you updated with what's happening in the market. That's probably what you would require if you are into a daily trading or if you are a daily trader. So choose your broker wisely. And number 6, manage your portfolio. This is an ongoing process. There is never an end to this. All you have to do is, once you start investing, once you have invested your money into the market, you'll have to find out what's happening in the market. You'll have to find out what's happening with your stock, with your investment, with the investments where you have put in your money, what is happening with it, if there is anything that you need to sell off and buy something else, if there is a better opportunity and you might need to switch in your money from the previous opportunity into this new opportunity. This is all about managing your portfolio, and this is something which you'll have to do the entire life after you have started your investing. Keeping yourself informed will help you take informed decision. You would know when to sell a stock, you will know when to come out of an investment, and you will know when to tap onto new investing opportunities. That is where keeping yourself motivated and keeping yourself educated will help you in the stock market. So you're now in the field, you're now into the investing field. There is one last step, which is not the 7th step though, but it's just a continuation of step 6, which I already discussed, is being consistent. You have to do this consistently for the rest of your life, or for at least for the time you are invested. And I assume you would remain invested for the rest of your life. So being consistent and persisting to your action will help you get to the goal that you have set for yourself. So this is just the basic for those who are thinking of starting investing into the stock market, or maybe at least entering the investing world. So these are the 6 or 7 steps which you need to follow. If you have this in mind, if you are confident about following all these steps diligently, the next step is for you. Well, these are just for the beginners to get more into details, drill deep into the stock market and understand what it is, or understand the investing world and how to tackle it. Anything and everything related to investing will all be there in this channel. All you need to do is just hit the subscribe button. Till then, SC signing off. Goodbye.